Hello everyone, welcome back to Learn to Trade YouTube channel. I want to talk about US dollar right after the US retail sales economic data, and as you already know, the retail sales indicators came in worse than expected. So that's why the US dollar it has depreciated a little versus its rivals. But before I will talk about the retail sales about the US dollar, please read the disclaimer. It's important to understand the risks, and if you have questions, you can email support. If you want to join us, if you're not a VIP member, you can access the link posted right below this video, or you can use this link from here. Follow us on Instagram. Please subscribe to our YouTube channel. So let's start with the economic calendar. And as you already know, guys, the US retail sales indicator reported a 0.3% drop in May, in the last month, versus 0.1% growth expected, and versus 0.9% growth in April. Core retail sales only 0.5% growth versus 0.7 expected, versus 0.6% growth in the previous reporting period. Also, Empire State Manufacturing Index worse than expected. Later, import prices, business inventories, and don't forget about the about the FOMC, Federal Open Market Committee, about the Federal Reserve, about the federal funds rate later today. But right now, let's take a look on the dollar index. Right after the retail sales, the dollar index retreated from 105.27. Okay, it has retreated a little, and in my opinion, and technically here, I've told you guys that as long as it stays above these former highs, above let's use this area. So we have something like or actually former resistance right now as support. So you can see here 104.92, 105 psychological level. It has failed to stabilize below it. Let's wait and see how it will react in the next hours ahead of the FOMC. I've told you guys that as long as it stays above this level, immediate low 104.62, it could still resume its growth. So yeah, I've talked about the dollar index in that US dollar breakdown for the VIP members. I've shared that video into the VIP group. So right now, yeah, it has retreated from 105.27, but the bias remains bullish, guys. Okay, it remains bullish. Let's wait and see how it will react. Also here around this warning line, dynamic resistance, only false breakout, gap down. Okay, so in my opinion, the dollar index needs to close this gap down here to make a very breakout above the warning line to be able to extend its growth. Okay, so in the short term, we cannot exclude a temporary retreat. Maybe it could retest this broken resistance area zone. And as I've said, as long as it stays above this immediate low, also above the 150% Fibonacci line, despite a new retreat after worse than expected retail sales, the bias remains bullish. It could only move sideways before jumping higher. And also, it has retreated a little after worse than expected retail sales data, but as you already know, the Federal Reserve is expected to increase the federal funds rate from 1.00% to 1.50%, and also the Federal Reserve is expected also maybe to announce more hikes. Yeah, it is expected to confirm maybe a new rate hike in the next monetary policy meeting, maybe a 50 basis points, 0.50% rate hike again in the next monetary policy meeting. So that's why right now the dollar index continues to stay higher. The dollar index is traded in the green here on 1 hour, even if the retail sales data came in worse than expected. Okay, so as I've said earlier today, personally I'm still looking for US dollar longs only, as long as it stays above this immediate low. Okay, so in my opinion, and something like an accumulation consolidation here in the short term, a valid breakout, a new higher high could signal an upside continuation, only because the Federal Reserve is expected to continue hiking rates. because the inflationary pressure remains high. As you already know, the US reported higher inflation again, so that's why the dollar index could still resume its growth, only because the Federal Reserve needs to take action. Okay, so this is my opinion. Personally, I'm still looking for longs, for US dollar longs, and let's take a look on euro versus the US dollar. Despite poor US economic data, so only temporary rebound. You can see here also on euro versus the US dollar, it has failed to stabilize here above this former high 1.0484, and yeah, in the short term we cannot exclude maybe a sideways movement, but in my opinion the FOMC could bring, the FOMC statement, FOMC press conference could bring sharp movements in both directions in the short term, and yeah, personally I'm looking for US dollar longs, as I've said, because I don't want to go long here on euro versus the US dollar, because the bias is bearish. Okay, so I'm looking for potential maybe shorts here, and I will come back also, and I'll talk about the majors. I will talk about the US dollar in my live trading session later today. Thank you guys. Don't forget to subscribe to our YouTube channel. Don't forget to follow us on Instagram. Thank you. Bye bye.